From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming January 28th Forex session in the Euro US dollar pair. As you can see, Friday was a bullish session yet again in this pair as we shot through the 134 resistance area that had been keeping the pair down for about 2 weeks. And looking at this chart, it's definitely looks like we're trying to break out to the upside. We gave a little bit of the bullish run back towards the end of the day Friday. Now, there's a couple different reasons for that in my estimation. Number one was the fact that it was late in the day Friday, and a lot of people don't want to be long over the weekend. Nerves and just don't feel comfortable doing so. But what else is interesting is that if you zoom out to the weekly, you can see that we are right at what would be the neckline of Head and Shoulders at 135. Now, if you measure the Head and Shoulders, it's 15 handles tall, and that's a pretty big Head and Shoulders. So you add that to the 135, and you get 150. Seems a bit of a stretch, I know, but when you really kind of look at things and you zoom out, you can make an argument for basically consolidation between 150 and about 120 or so. And if that's the case, 135 would simply be the midpoint, and all of this move would make sense. So, having said that, certainly there is that argument to be made, and if you can get your head around that, you can see the importance of 135. I think this will happen. Quite frankly, it's a risk-on environment. It looks like we're returning to normalcy in the forex markets, anyways. Dollar yen's breaking out to the upside. Euro dollar looks like a pair that you want to buy on pullbacks. The pound's been beat up a little bit here recently, but it's starting to show signs of support as of Friday. So it looks like we're going to be back to sell the dollar. If that's the case, then this will be much like when I first started trading Forex about 6 years ago, 7 years ago now. You can see that it was just simply a matter of buying the euro every time it dipped, and it had been that way for quite some time. We had some major pullbacks, granted, but in reality, even here, that fall there was just a simple pullback from the rally. You can see that over time, this pair does tend to trend quite nicely, but I can tell you from personal experience that it does tend to trend a little easier on the upside than the downside. So that's one of the reasons why I call it normalcy. On a daily close above 135, the risk to reward ratio is so massive on this trade that I'm more than willing to go long and quite frankly, basically step away from the terminal on this particular trade. I think this could be a nice long-term trade in the making.